love the channel and find it useful in becoming a happy retiree. Subscribe today. We just wrapped up the first quarter of the year. Dow, first negative quarter we've had in a very long time. First quarter in the books down 2.5% for the Dow, 1% for the S&P 500, 2% negative for the NASDAQ. And we finished this quarter with the 10-year Treasury at about 2.75%. We started the year at 2.4. So we've seen a market rise in interest rates. That March higher really was set off by an inflation number, a wage inflation number at the very beginning of February or the end of January that started to roil markets. Now, it's not as though we're in this awful environment. We just got used to an escalator higher in 2016 and 2017. Stocks slowly went up with almost zero volatility. The normal stock market is back. The normal volatility is back. Over the course of history, markets fluctuate about 0.75% in any given day, a normal day. 0.75%. And if you think of a Dow, let's say a Dow Jones around, let's pick a round number, 25,000, 0.75% would be 187 points. A normal day. The law of large numbers makes a triple-digit move, what should be now the norm. Yet I still get updates. Dow futures down triple digits. Dow futures up triple digits. Well, of course they are. Because they should always be every day, because a normal day will be around a 0.75% move for markets. That, for some reason, still has a little bit of emotion tied to it, because in 2009, a 187-point move divided by a Dow that was around 7,000, well, that's almost 3% move, or 2.75%. So 100 points then is a lot more than 100 points today. So just remember that the law of large numbers has changed the perception of how markets are doing in any given day, because of the numbers are very different now. So think of percentages as opposed to, or rather than, points. So with all of that, is the market still intact, or is the economy still intact? That's what really matters, right? Because we can have plenty of fluctuation, but as long as the economic environment, the foundation of industry in America is solid, then companies can operate in a fruitful environment, or a fertile environment, and continue to churn out higher and higher profits. That's what matters to you as an investor. That's what really, that is the ingredient that matters. Not that we have back and forth in Washington, and one day you're gonna see this industry under pressure, another day another industry under pressure. What matters is the fundamental environment that we're in. So we're gonna do a quick economic update. We call it CHIME, C-H-I-M-E. That's how I remember the core components of the economic environment we're in. So the C in CHIME stands for confidence. Consumer confidence is still near an all-time high. Business confidence, by the way, is up. Consumer sentiment rose in March to its highest level since 2004. 2004. And that's people answering long questionnaires that assess current and future economic conditions. Hey, how do you think things are going to go with your income over the next 6 months? Well, confidence right now in America is high. That's a big deal. And all of the gain in sentiment has been among households within, or most of the gain, a big chunk of the gain has been in households with incomes in the bottom third, by the way, in the bottom third of the income scale. While the economic assessments for those with incomes in the top third actually showed a little bit of a decline. But in general, consumer confidence in America is, for the most part, it's in a very, very strong place. And if we have confidence, what does that mean? It means consumer spend. Again, we know that 71% of our economy is made up of consumer spending. Number two, from a business standpoint, business optimism is the best we've ever seen. CEO confidence in the first quarter at an all-time new high. NFIB, the optimism hit a 45-year high in February. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.